we out here? I think we are. Good morning, everybody. Happy Thursday. This is the morning show, Stock Market TV. Spencer, JC, Steve Alfonso, you know the drill by now. What's doing today? Let's take a look at the market. How are things looking? Things are looking all right. It's been a good week, I'll tell you that. Gonna be a good show today. A new guest. I love when we have new guests on the show. Jeff deGraaf will join us today from Renaissance Macro Research. He's definitely in like the top tier of Twitter follows. If you don't follow him on Twitter, you really should. He'll join us at 9. A lot to talk about with him. Very excited. It is Thursday, which means we'll have Sean on the show, talk some options at around 9:30. We'll probably want to talk about Apple. I want to talk about Broadcom. I may want to talk about Dave & Buster's if the guys let me. We'll see what happens. I don't know. It'll be fun. Good morning, chat. Let's go. Hit that like and roll my intro, please. Let's boogie.
All right, everybody, we are back. We are back on the beach after a nice little break from the beach. Little city yesterday. Little action with Pearl Dog. No big deal.
Are you going to tell everybody where you went for sushi or no?
I went to Japonica, so it's on 12th and University, and this place has been around in New York City for since the 80s. So sushi wasn't even cool back then. So it was kind of a unique situation. This thing's been around for a long time. So they do a nice job. They didn't have any uni though. So that was my first world problem of the day yesterday. No uni. Can you believe that?
Surprised to hear that.
Yeah, I was a little bit surprised as well.
The fatty tune looked great. It was a nice spread.
Honestly, they didn't have the Otoro either. They only had the Chutoro. Really? Yeah, a little disappointing, but we did okay. I had to go to the country club and suck up to,
Did you do good? How'd you do? Tell us about the country club.
My wife is good with that stuff. By the time they get around to me, they're like, "Oh, you're her husband? Oh, I spoke to your wife," and then we're good.
Like most people that are listening to this right now, we can't help but imagine scenes from Caddyshack when you're walking into this country club.
My God, my wife said the same thing. They were all wearing green jackets.
Yeah,
because the committee, the membership committee was all in green jackets. And then I had my pledge pin or whatever, and it was white. So
it's like a fraternity
status.
It's like a fraternity for old people with all this weird shit.
Fraternity for old people. Yeah. But they're doing a good job of trying to get younger people into the club, but the board members are not exactly millennials. So, retired lawyers and real estate developers and stuff like that. Listen, it's to be on a membership committee, you have to have enough time on your hands to actually do this volunteer stuff. So younger people just simply don't have that kind of time. We got kids and business and markets are moving and if I were a retired lawyer with nothing else to do, sure, I'll be part of the membership committee. Yeah, why not?
Yeah. So, but you think you did good? You think it went well? Probably a green light.
I mean, the conversations of, so JC, what do you do for a living? It's like,
oh God.
Morgan's don't say plumber. You're not a plumber,
What'd you go with?
She's literally telling me not to say that in front of the, membership committee. I'm like, isn't it so much easier if I just told you I was a plumber?
Just
wait a minute, you make wine, but you make charts. And then the wine, yeah.
I've been going with lately, the best way to summarize it in a sentence to my golf friends and new people I meet is I talk about stocks on the internet and they say, okay.
I still I'm a plumber. There's no follow-up questions. Oh, okay. Plumber.
Right.
Next. So, right. It's just moving right along. Right. So I'm good with plumber. Librarian is good too. That's another good one. Oh, I'm a librarian. That's boring.
No,
and I know what that is. And I don't want to talk about that. So move on,
No one would believe you.
No one would believe you.
I know. But it works. I got that from Fami. I spoke to Fami yesterday on the phone yesterday. All right, why don't we say why don't we hit that markets? What do you say there, Spencer?
No floods here, JJ.
All right, ladies and gentlemen, big day yesterday. Dow futures today flat, not doing anything at all. S&P futures with some moves. We're going to talk about the Broadcom and some of the movers that are driving the NASDAQ 100 futures up almost a full percent this morning, a third of a percent for the S&P 500. So S&P 5440, NASDAQ 100 pushing 20,000 on the futures. Dow futures 38,700. You got bond futures up again, back above 119. 10-year note futures up again. Crude oil futures pretty much flat, hanging in there around that 78 level. Copper futures flat, 455 on the copper. Gold down 0.5%, 2340. Silver down 2.5%, 29.5. With volatility down towards 13. Down towards 12. And then over in the funny money, you got Bitcoin. Flat on the day, just under 68,000. Ethereum, 35,000 and change, down 1% on the day. Solana, 150, down almost 3% on the day. Binance, just above 600. We were looking for a breakout above 700 just probably, a week ago? And now it's hanging out down near 600, trying to hold that. Total crypto market cap, Spencer Israel, $2.4 trillion. Bitcoin dominance pushing 56% here. And that's your morning rundown brought to you by the Boston Celtics that are up 3-0 in the NBA Finals. Shout out Beantown. I don't hate Boston. I'm not like an OG New Yorker. Like I went to New York for a long time and I kind of like inherited the Rangers in like a half-ass way, right? But like I don't have that animosity towards Boston that a lot of New Yorkers have. I kind of actually even like the Red Sox a little bit. So I got no beef with the Celtics taking one home. I got no problem with that. Luka not playing any defense at all. It's probably a big factor there. They're really abusing him pretty hard, huh?
I don't really think about Boston sports. I'm fine with the Celtics.
But you do have that animosity. So does Spencer, right, Spencer?
No, I don't at all.
Well,
it's hard as a Giants fan to not like Boston sports fans.
Yeah, and you think baseball's too boring, so you don't have that Yankees Red Sox thing going.
When you're a baseball fan, it's different.
Exactly.
Yeah. See, one of my favorite things to do in New York was to go to the big rivalry. So, like when the Rangers would play the Devils, Yankees, Red Sox, right? Like those are probably the big two. Yeah, and then also the Subway Series, like whenever the Mets would play the Yankees, that was good too. Before we get into the market, one really cool thing that was cool about New York, I was once at a Yankees game, and it was Yankees-Mets at Yankee Stadium, but the Rangers, I guess, were like in the playoffs.
Oh, so you did a double. You did a double.
No. We went to Billy's afterwards, after the game. Okay. And then the Yankees and Mets fans that hated each other like for the last 3 hours of my life, now we're all Rangers fans, and they were hugging each other and like celebrating together after the game, after like hating each other for 3-4 hours up until that point. I thought that was like a very New York thing to do. Like, I hate you. Oh, but you're a Rangers fan. All right.
Right.
That was cool. That was cool. Okay, so talk to me about what happened with Broadcom yesterday. Big action. How much of this action in the NASDAQ is Broadcom this morning?
It's going to be a lot. You can tell me what the weighting is. But, I mean, this stock, we talk so much about NVIDIA. This stock has been as good as any stock this cycle, really off the COVID lows. I mean, look at its bear market in 2022. Wow, you can barely see it on this chart. So this one has been as good of an AI play as anything, really, and it's a massive company. The way this company is growing is absolutely absurd.
Where are we on market capitalization at this point?
Huge.
We are at $700 billion. This thing's going to be $1 trillion company.
I mean, they're making like $40 billion a year in revenue. They are growing quarter over quarter about 5%, year over year about 43% top line. They have 35% free cash flow margins, 60% EBITDA margins, 43% net income margins. Their sales have really blown up. So since second quarter of 2022, they're making about $8 billion a quarter. They just reported 12.5. right? To give you an idea.
So they did a what, 10-to-1 split?
I think this company should probably be in the Dow.
All right, hold on. You
took what they're thinking.
You're stealing my thunder. I want to ask the chat.
Sorry.
The chat. I think we're all on the same page here. Nvidia and Broadcom are clearly set up to replace shitty Intel and shitty Cisco in the world's most important index, which is the Dow Jones Industrial Average. The question is, I think we all agree, like that's common sense at this point. The question is when. And that's what I want to ask the chat. Are we talking about this summer? Are we even talking about this year? Or is this a 2025 thing? What are you guys thinking?
Well, yeah. All right. I have some comments on that too, right? Because
they don't make these changes that often. And they just made some changes.
And also there's other companies that would argue they're in line first.
Like who?
Don't you have to put Meta and Google in there?
Fine, but not replacing Intel and Cisco.
Why not? So IBM's out then. So IBM's out too, and they got to put in one of these Mag 7s.
Fine.
Probably Google. And then Broadcom.
But you would take out Verizon and add Google. Like you would take out a communications and replace it with another communications. I think the Intel and Cisco for a Broadcom and Nvidia is more of a cleaner switcheroo. No? You don't think so? You don't think?
I think so. But if Broadcom got put in before Google, I don't know. But you're right. I hear you. They got to kick out.
It's not so much being. They're just different. Like Google replaces Verizon.
We just did their job for them, JC. They should make those 3 moves by the end of the year. I think it's a no-brainer.
And then what about Facebook? Facebook doesn't get any love?
Facebook not yet.
Facebook not yet, but Google yes.
Yeah.
Because Amazon's in, Apple's in.
Amazon's new addition.
Yeah, Amazon's in, Apple's new. All right, yeah, I guess you're right. You take out IBM. No, sorry. You take out Cisco, Intel, and Verizon, and you leave Big Blue in there. And you add Google, Avgo, and Nvidia.
Yep, I like it. Brian Harris comment in the chat. I think that's true with all sports. Dawson,
I was thinking us baseball player fans are drawn to markets because we're used to failure. Hitting 300, we get to hit above 500, hopefully. Not even. Listen, I've spoken to a lot of great traders that'll tell you that they have more losing trades than winning trades because, when they're wrong, they get stopped out early. When they're right, they let it run.
Most people's win rates are well below 50%.
Yeah.
It's strange to have a win rate above 50%.
Yeah, but not in every sport are you rewarded for failing so much as you are in baseball.
That's a great point.
Like other sports don't have that. Like if a goalie allows 70% of goals, like that's no good.
I don't know. Like I think there's a lot of analogies, right? Like for football, you get 10, 15 drives a game. You're going to score on 3, 5, 6 of them.
Yeah.
You could
if you're moving the ball down the field and you're playing that field position game, it's not a loss. It's not a failure.
Golf, there's risk management, right?
Like for example, you get 2 first downs and then you punt it and you pin them inside the 5. Is that a fail? That's got to be a W. Yeah, you know what I mean? Like it's not as clean as I struck out or I popped out or I grounded into a double play.
We could do a special podcast series of just talking to people who are in markets now who are former athletes.
Yeah.
And just talk about only that topic. It's
not just markets. I would say investing in general, entrepreneurship as well.
Right. Yeah, 100%. Business.
Yeah, for sure.
Dawson, keep updating the Tiger score. I only got 2 screens here. I can't keep flipping.
Wait, on this topic.
Tiger score.
US Open, baby. Yeah.
On this topic, did you guys see, I think the weekend before, Roger Federer gave a commencement speech. He talked a little bit about this, right?
I thought it was
in his career, he won like 85% of his matches, like the overall matches. But he only won like 54% of the points. He basically lost almost half the points he ever played, right? And the lesson there was that individual points don't matter in a vacuum, right? They matter within the context of the broader match. And also, it's about like pushing your chips into the table when you have the opportunity to really win, right? Really win.
He knows when
those points matter more.
Yeah.
Right.
That was a great speech. I thought that was so awesome, thoughtful of him to come up with that.
I got one. Throw up the new slide 2 here, Spencer. So can you guys fill me in? I don't know the details. Like I don't really read the gossip columns all too often, but my understanding is that Elon Musk, the world's richest man, is now $56 billion richer. Do I have that right, or did I misread that?
Have they settled this? Is that true?
Didn't that happen yesterday?
It happened last night, Steve.
Well, thank God, because that's a scary world if you don't pay somebody what you agree to pay them.
Yeah, this is solid, man. It's $50 billion, bro. And when you think about the market capitalization, we did the math the other day. It went from 30 billion to 1.3 trillion in 2 years. And we did the math that nobody up until that point, you can argue maybe Nvidia's maybe created a little bit market cap over the last year or so, or year and a half. But at that point, no one in the history of human civilization had ever created as much market capitalization as Elon Musk during that run from 2019 up until 2021, right? I mean, 2 years,
yes.
30 billion to 1.3 trillion. Like, so yeah, he got paid $54 billion or $56 billion. Like, I would argue maybe he's underpaid.
So, yeah, JC, I agree. And it's easy to look at something like this without knowing the nuance of what they're talking about and say, like, $56 billion, that's egregious, right? But if you actually go back and like see what happened here, this deal was agreed to like 5 or 6 years ago. The major networks were reporting Tesla as a potential like bankruptcy concern back then. So he took no salary, he took no bonus. He said, fine, we'll figure it out. You pay me with all stock. This was back in the days when he was working like 24 hours a day and staying up all night at the factory. Okay. So they worked it out. They added whatever, 500 billion in market cap, and he's getting about 10% of it, it looks like. And that's fine. But that's what they agreed to. That's the deal that they agreed to. They said, okay, it seemed like a good deal then, I think, for the board also, not just Elon. And now the man's getting paid. I don't see any problem with it.
Like I said, I think he's probably underpaid, right? I mean, if he took this thing from 30 billion in market cap, and I'll say it again because just every time I say it, I'm like, geez, Louise, $30 billion to 1.3 trillion in 2 years, and he's only getting 50 billion of that.
That's right.
Damn.
Right.
You know what I'm saying? Pay the man. Damn, son.
I love the comments in the chat. Yeah, it was a risk for him too, right? That pay package could have been a zero. It could have been a zero. So whatever. I'm glad that seems to be the outcome of this.
So more importantly, because I don't get any of Elon's money, more importantly, I mean, we talked about it yesterday. Sold puts yesterday, the 165s. Great. So we don't think it goes lower. Great. But do we think it goes higher? I think a run, listen, consumer discretionary, I said it yesterday, consumer discretionary has been such a dramatic underperformer, came into the week down for the year, Strazza, consumer discretionary. Tesla's second largest component of discretionary. If you get that rotation, and by the way, if this is a bull market, which my understanding is that it is, and we're approaching that 2-year anniversary this Sunday, is consumer discretionary just going to start a new leg lower and collapse, and Tesla's going to complete this massive top? Or is this just a range-bound market, and we're down near support, and the ripper's about to begin? And what's the upside here? The upside's a double, at least. So from a versus reward standpoint, I could think of worse things.
Yeah, I think it's okay. It's a sloppy chart, is my only, it's a
extra sloppy for you. But in a bull market, one of the largest companies in the world and the second largest component of the consumer discretionary sector Should we expect this massive top to complete?
I was saying something similar about Apple, and I don't know how much you liked it just like a month ago.
I agreed with you wholeheartedly. What do you mean? I was with you on that. I was with you on that.
All right.
No?
I don't know.
Yeah. What do you mean you don't know? Check the tape. I was with you.
You were like short Apple last
Yeah.
quarter.
And then I took profits before earnings,
I can't
and you specifically put on a risk reversal before earnings.
Yeah.
I said you were crazy, but I respected your decision. You reiterated that you were not taking profits before earnings.
That's right.
I said you were crazy, but I respected it, and you were right, and you nailed it. But
This
again,
is similar. It's similar
it's
setup.
a very similar situation. That's exactly right.
And JC, we did this with Google. Was it late last year? Remember? Google missed AI. That chart looked like crap. March. Look at Google in March.
That's right.
Like, really?
And Walt Disney.
Yeah. Dude, I mean, where's your head at on this Nike? Because I think you got to treat Nike the same way.
I think you're probably spot on. Is Nike the third largest component of consumer discretionary? I think it is, right?
Can I just say, somebody mentioned Michael Jordan. How much I've been thinking about Michael Jordan lately. Yeah, I know. I think he's got to go up on the wall. I got to take Shockey down. But then I'm like, am I going to put Michael up and not Tiger? Do I just put him like side by side? Just flank them on each side of me? A Michael and a Tiger? Right?
Well, isn't Tiger like the Michael Jordan of golf?
I mean, yeah. These are my two spirit animals. Michael Jordan and Tiger. The two greatest athletes, most dominant athletes of all time.
Fun fact, Nike is actually the 8th largest component of consumer discretionary. It was definitely way high. It was definitely top 4 not too long ago, but because this thing has sucked for so long, but yeah, you know, I'm with you on the Nike. I mean, I got to see it, but yeah, same thing. You got this massive top. Are you going to bet that this massive top is going to complete in the middle of a bull market? I think the Tesla is cleaner than the Nike, to be honest. Because that 165 on the Tesla is as clean as it gets.
They're both slop jobs. 100%. Nike was
they're both slop jobs, but Nike has more, Tesla has more well-defined support.
Yeah, fine. Yep. Yeah. Did we get a PPI? Can we just get a read on that quick, Spencer? Because this matters.
Are they still doing that?
Yeah, it usually comes the day after. So you do the consumers on the Wednesday and then the producers on Thursday. Is that it? Did I get that right? Actually, not always Wednesday.
Yeah,
Thursday.
sorry. PPI up 3.2% for the month of May. That's in line with estimates. Core PPI flat, which was below the 0.3% estimate. So producer inflation not quite as soft. I don't know. No, soft was not the word that we used yesterday. What was it? Cold? I don't remember, but whatever. Not quite as cool as the CPI, but not hot. Definitely not hot.
So let's talk about yesterday's price action real quick, right? Because we did have these two big market events. So they came in, and we were able to talk about it a little bit on the show. They bought the cold CPI, right? So nice bid for markets all day. Broad strength in markets. Then all of a sudden, Powell came on, and they didn't really like it. They didn't really love it, right? So you got a bunch of, I guess, filled candlesticks where we rallied up until the Powell, and then we sold off for about, an hour and a half into the end of the day. So I think today will be interesting to see how they really digest the Powell, and now they got the PPI too. So I don't think we got like a clear reaction from the market to yesterday's events quite yet.
Yeah, I'm thinking how we close the week, right?
Yeah, I like that. Sometimes it takes a day or two, right, to kind of sort these events out. The analysts start putting out notes. Nick Timoreos writes an article, right, and things change a little bit.
Nick Timoreos, is that somebody I need to know?
I don't think I said his name right. He's the Fed whisperer. Timoreos.
So I just want to say a couple of things. We've got Jeff deGraaf on the show today. Guys, I just want to let you guys know what a treat this is. One of my personal favorite technicians, certainly inspiring to me. I probably learned a ton from deGraaf over the years, but I will say one of the things that, has been kind of instilled in my head about Jeff deGraaf over many years is that the first thing we want to do is identify the type of market environment we're in. And Jeff has a number of ways that he defines the type of market environment we're in. And it's not like a perfect sauce, like it's not like an exact science, but he tries to do as good of a job as he can. Other people do it in different ways. Some are similar ways. But that mentality of kind of setting the stage of what environment are we in, and then we decide which tools and strategies are best for that environment, like that whole concept is so important. And I don't know that there's anybody in this world who's been more influential on me in that particular aspect of market analysis than Jeff deGraaf. I mean, that one right there. And another one, we got to find it and drop the link in the show notes. There's a podcast out there from several years back. Could be 3 years, 4 years, 2 years, something like that. And it's Jeff deGraaf and Ned Davis. Oh, what a great conversation. Two of my absolute all-time favorites. We got to find that, drop that in the show notes. Great conversation. So very excited for Jeff deGraaf to come on onto the show.
Yeah, it's awesome. One of the greats. Hey, before he does, two things. Roaring Kitty apparently closed out his call position. There's a lot of speculation. Because it could only be him based on the open interest.
Got it.
Unless somebody's coming out selling calls like to open in GameStop.
That could be fun.
Unless it's that, which it's not. It's Roaring Kitty closing his position. So there that goes. And then somebody's asking about Uber. What do you want us to say about it? It's a great setup. It's starting to work. Coming right off of those prior cycle highs. Rallying with everything else. Not much new to report on Uber.
I just dropped the link, Spencer. So this was on May the 1st of 2021. All right, so 3 years ago. What did I say? 2 to 4 years? So that was pretty good. I just dropped the link. If you could drop that into the show notes, guys.
Yeah.
Guys, gotcha. two absolute legends, Jeff deGraaf, Ned Davis, just sitting there shooting the shit, talking markets, two of the best. Great conversation. Go check that out.
If he rolled the calls, Vog, you would have seen it.
Yeah.
Right.
The blockchain fixes this, by the way, because you would be able to see how that wallet is transacting. It's just another example.
Shall we
don't have to, speculate? Was it the Roaring Kitty or was it not? Like, we would know that it's the same wallet.
It was him.
Yeah, no, you're probably right, but that's not the point. The blockchain fixes this. We wouldn't have to have this conversation like a bunch of cavemen if the old this was on the old blockchain chain, right?
I love it. I'm going to read that book, by the way.
What book?
I'm going to do it.
Yeah.
What book?
The one that you don't stop talking about. Forget it. We won't go there. Your favorite book. The book about the block and the chain.
Oh, I thought you were technical analysis of stock trends.
No.
My favorite book is Edwards and McGee.
Chris, what's his name? Chris something?
Oh, Read, Write, Own, Chris Dixon.
Yeah.
It's about the blockchain. It's about a lot of things. I guess the blockchain is obviously part of it. Yeah, you should read it. I don't know why you haven't. You would also see that the blockchain fixes all of these things. All these problems that we have, the short interest takes 2 weeks, T+3, T+1, like all that shit is nonsense. It's for cavemen.
We have so many good JC-isms. My soundboard isn't big enough, but like that would be another good one, Spencer. That's another fan favorite.
What blocking chain?
Blockchain fixes this.
Yeah.
Oh, okay. All right. Should I bring Jeff on?
Please.
I'm on here.
Yo,
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Ladies and gentlemen, Jeff deGraaf. What's up, Jeff? How are you?
How we doing?
Listen, man, no complaints. Down here at the beach for a month, down over by Cape May.
All right.
How about yourself?
I am looking out to the Long Island Sound right there. So this is the only time. There's about a 3-month window to be in the Northeast, and this is certainly right in the midst of that. So all good here. Thank you.
That's right. So I was just telling the folks, you're definitely one of my favorite technicians, certainly an inspiration to me, and many others. Particularly what stands out from your work that's probably influenced me the most is the, you know, identifying the type of market environment we're in first, and then deciding which tools and strategies are best for that environment, as opposed to, just shoving some strategy down the market's throat,
Right.
regardless of the environment. You
Right.
didn't quite put it that way, but
Yeah.
that's how I.
No, it's true. It is a way to put it, and it's certainly a valid way to put it. Yeah, the quants would call it regime analysis, which is essentially what it is. But you have to know your regime, right? And the challenge is that you have to figure out what is important in terms of regimes, right? So trends are important. Are we in an uptrend or a downtrend? How you want to define that? What's the interest rate environment? There's several that you can use, but certainly that is an important identifying characteristic that then allows you to use different oscillators. And interestingly, something that we've started to develop and implement here is using volatility adjustments based on the regime, right? So it makes a lot of sense that if you're in a high vol regime, then your hurdles need to be bigger, right? Or you need to have kind of more of a move to have confirmation. If your volatility is low, you can actually tighten that up. It's a little bit like the Bollinger Band concept, right? Where those bands start to compress. That's just kind of graphical statistical analysis. But using that is certainly something that we've found to be able to add alpha, particularly from an asset allocation standpoint in making trend change decisions there.
That's a really interesting concept, Jeff, because how many times have I had this conversation like, GC, well, what's confirmation? Is it a close above a level? Is it intraday? Is it two closes? Like everybody has their own shtick, but identifying the volatility regime and adjusting that confirmation accordingly, that makes a lot of sense. I really like that concept a lot. Nothing that I've quite thought about, but that's cool. Before we get into the current regime, I was just talking about that podcast that you did with Ned Davis a few years back, which was awesome. That's like my Christmas. deGraaf and Ned Davis shooting the shit for 45 minutes. Like, that's fantastic. I'll listen to that all day. Can you talk a little bit about who some of your mentors were, sort of who inspired you in the work that you put out, these days?
Yeah, look, I grew up under Bob Farrell at Merrill Lynch, so that was, obviously a big influence on at least getting me kind of started into thinking about technical analysis. I did not go to technical analysis school; not many people do, right? So,
is that a thing?
What's that?
Is that a thing?
Well, there's the MTA, right? And you can get a CMT, which I have. I'm a chartered market technician, but that was certainly in the latter years, not in the formative years necessarily. And I always came to the markets, or I should say, I came to the market from a fundamental perspective. My schooling was in fundamental analysis. I was a finance major. And so that all made sense to me. And I was actually going to go into real estate because I actually still think real estate's a great profession from a development standpoint, just because there's so many inefficiencies, right? But the action is kind of, ho-hum. It sort of moves at a snail's pace compared to what we do on a daily basis and kind of thinking about the world. But if you want kind of the easy road, and I don't mean that to sound pejorative, but the inefficiencies and kind of the slow pace of real estate is pretty interesting in my book. But that said, I went into the markets and under Bob Farrell at Merrill Lynch, and a gentleman by the name of Steve Shobin was actually my kind of hands-on mentor, my Yoda, if you will. And we actually did a podcast with Steve. It was my first podcast that we did, just talking to him about kind of his process and how he came through. But it was really more observational, right? And so I really appreciated that things weren't all buttoned up. And I think anybody who's taken finance courses and looked at the the growth models, the Gordon growth models, et cetera, you can start seeing that the math is very elegant, but the inputs are really kind of questionable at best, right? I mean, you're in your G's, and if you miss those by a little bit, the valuation changes by a ton. And as kind of looked at it as like, okay, well, that's perfect in a perfect world, but there's so many imperfections, and so that really resonated with me. And I've always had this kind of innate probabilistic mind, right? Thinking about things from a probability standpoint. And so the technical analysis was really kind of forcing that function, right? It's not 100%. You come up with your formulas fundamentally, and you get some price, and if the price is better or worse than what you come up with, you either buy it or sell it. That's pretty interesting, and I think there's something to it. But technical analysis was really kind of a way to say, hey, what's wrong with my input, right? How am I thinking about this, and am I thinking about it correctly? So those are the kind of the areas that I gravitated towards. So Steve Shobin was very influential to me, and then as I've progressed, obviously guys like that I just got along with so well, and they were some very good friends, and unfortunately they were older than me, so some of them passed on, like Steve Leuthold as an example. Was great. Ned Davis is a good friend of mine. But these guys, they understood it at an earlier time, and they used technology as it was coming up to start to leverage that and make it a lot more legitimate than just a purple crayon and a ruler, right? And so it was helpful, and I appreciated that, and kind of took the ball and ran with it, and that's what we do at RenMac, which is really quantifying a lot of the discipline, the technical discipline. Again, not to be necessarily right or wrong, but just to put it into probability perspective to say, hey, look, this is we think there's a 80% chance on this one, or there's a 50% chance, and we have no edge, right? So that's how we try to think about the world. And there's plenty of securities and plenty of environments where we just say, look, we're going to follow the trend because we don't have an edge in any other way. We don't see anything that really jumps out to us, and so we have to be careful around that.
I want to get into the market environment, and I kind of want to just throw this out there if you want to weave it into the discussion. But I'm curious, when you're thinking about trend following versus when you're thinking about mean reversion, and how you think about that. I also want to a question that comes up a lot is, should we be buying leadership? Should we be buying the winners, or should we be looking for the ones that are turning, like these former laggards, looking for that rotation? These are a couple of the questions that we very commonly ask ourselves. So I'd love to hear your thoughts on that as we discuss the current market. You talk about what regime we're in. We're certainly not in a high volatility regime in the equities market, so we could check that one off. Yep. Right. So it's the top down approach, that deductive methodology of, well, we know it's not a high volatility regime. We know the stock market indexes are not in downtrends. Right. So we can kind of like eliminate some of those and kind of narrow it down. So, how are you thinking about the market here in mid-June?
Well, really, really good question. Certainly the volatility regime is low. And what that does is it actually, the benefit to that is that it allows you to have a much tighter position as to where you're wrong, and when you have a trend change, right? I don't know if that's wrong or not, but we're bullish and we're riding this trend. So if we're going to get shaken out, we'll be shaken out pretty quickly, right? So a high volatility regime would require that stop or that trend change, you have to give a lot more back to have that confirmation. So the good news is we don't need a lot of deterioration before we pull the ripcord. We're still bullish. I think the most important part of where we are right now is, and it's very close, so it's a question mark. Right now we are in a higher interest rate environment regime, right? Obviously a trending regime higher on rates, but that's very close to changing. So that will start to shift if that happens. I mean, that could happen. That could actually happen today. That's how close we are. That could happen easily within the next week or two. And if that happens, then obviously we have a little bit different scenario there, and that's more towards the sectors and more towards the the industry groups and some of the styles than it is the market overall. But that would certainly be helpful and get us thinking a little differently about things like financials, right? Get us thinking a little bit differently about things like real estate. So that's going to be important as we go. But look, we're in an uptrend. I would say, in a note that we put out to clients a couple of weeks ago, just said, look, this is not a momentum market, right? So we talk about regimes. Are we in a trend market or are we in a momentum market? We're not in a momentum market. We're in a trend market. And so when you're in a trend market, what that really means is you're 3 steps forward, 1 step back, 2 steps forward, 1 step back. So you don't need to chase breakouts. You don't need to chase things that are extended. That's not to say that you sell leadership, but when you're putting on new positions, you can look for what we call optimal entries. Those are oversold conditions and uptrends. So that's how we think about it. When we're putting fresh money to work, we're looking for those oversold conditions and uptrends. One right here that's kind of at the margin, but certainly we're still more bullish on it, would be the banks, right? So banks are still in uptrends. They actually have a lot of good
big
charts.
banks or the regionals?
It almost doesn't matter, but the regionals officially. But State Street was on our list, I think yesterday or maybe 2 days ago, as an oversold condition. So those are names that we kind of look at when they've kind of fallen out of favor, but they're still in trend. Particularly with the interest rate environment, that becomes pretty interesting to us. On momentum versus laggards, what I would say, just as a general rule, is 70% of the time stick with the leadership. You're better off in the leadership, particularly coming out of a consolidation or a base formation, or particularly a bottom if you're lucky enough to find that. But the leadership is really the representation of what's happening and what's going to be in vogue the next cycle, right? So the SaaS names were very, very hot coming out of COVID. NVIDIA, was hot before people even could spell AI, right? So you could see those things developing. And the challenge is always to try to fit that narrative, right? And we're just not narrative seekers. That's not a big deal to us. I know it's very important to a lot of people, I think, psychologically, but it also creates these false premises that I think you need to be very, very aware of, that you buy into a narrative and, that may or may not be right. And you got to be careful.
Jeff,
an old saying that I've always, I think I coined it, is, the only difference between conviction and stubbornness is outcome, right? So if you think about it, if you've owned NVIDIA and you've killed it, and you said, yeah, I had conviction, well, that's great, and maybe, but if you owned Intel and had conviction, you look like an ass, right? So it really just depends on the outcome. And so we become very, very aware of that, or try to be self-aware of those things and not buying too much into the narrative and just really letting the price of the securities talk to us.
Let me ask you about that narrative. So when you talk to portfolio managers all the time, right? On a regular basis, you hear probably a lot of questions that might rhyme, so you can kind of develop what the narrative might be out there from the portfolio managers. Do you think about that narrative and look for potential divergences that contradict those narratives? You try to ignore the narratives altogether and just focus on what you're doing, kind of like blinders on? Or do you use those conversations maybe to your advantage? Like, how do you think about that?
No, I'm always, I've been doing this long enough. I'm 35 years in this business, that I can listen to the narrative and kind of compartmentalize it, right? And put it in a separate room. Sometimes it's padded, sometimes it's not. It's always locked though. So I can definitely disassociate with that. That's not to say it's easy, but I've learned to do it. And I think the narrative, the narrative is interesting. The narrative is compelling, and as human beings, we like stories, right? And so stories kind of capture people's interests. What I like to do though is kind of get the prevailing narrative, not the specifics, but the prevailing narrative, and then find the points where the market is disagreeing with the affirmations of that narrative, right? Because that becomes interesting. And, people talk about the stock didn't go up on good news, or, whatever the case may be. So looking for kind of those heavy points around a name, I think, are interesting when the narrative is affirmed or confirmed. and the stock doesn't react, that to me is always kind of a like, hey, let's be aware of what's going on here, because this may be late innings in this particular instance.
You mentioned humans. At the end of the day, what we're doing here is, at least how I like to think about it, is we're analyzing human behavior. And maybe one can argue that fundamentals are driving prices. I would argue that positioning oftentimes, or mispositioning, is what's driving those prices. How do you think about that psychology and human behavior in your actual work, like in the way that you approach the marketplace? How do you use that psychology?
Look, there's I don't care what the situation is, and we said this around COVID. People said, we've never seen anything like this. I'm like, guess what? When something happens, and whether it's the 9/11 World Trade Centers, whether it's COVID, whether it's the Cuban Missile Crisis, you're never going to have those things repeat. It just doesn't happen. But your responses happen consistently all the time, because there's three things you can do. There's only three things you can do. You can buy, you can sell, you can hold. That's it. If you come up with a fourth, JC, tell me, because I haven't figured it out yet. But that's all you can do. And so you figure out that given those three outcomes, those three paths, what are people doing, right? And where are they? And so when we see people that are reacting in a way to, the uncertainty, that makes us feel pretty good about things, because we know that there's a consistency to that behavior. And look, fear has a much different psychological pattern to it and identifier than greed does. Greed takes a lot longer to kind of play itself out. Fear is pretty quick. But that's it. So we really narrow our playbook down. And I think that makes a lot of sense if you think about it. I mean, how are you going to figure out what the next crisis is, right? I mean, it can be anything. I mean, we're not fortune tellers here. We're just trying to manage the future as best we can. And so if you think about the reaction, not about what the details were that drove the reaction, but the reaction, I think that puts you in a much stronger position to be able to make good, conscientious, and potentially profitable decisions around that.
Consumer discretionary came into the week down for the year. Cap weighted consumer discretionary S&P down for the year, in the middle of a bull market.
Yeah.
When you talk about leadership versus rotation, potential very advantageous risk versus reward profiles in an offensive sector in a bull market that has underperformed as dramatically as consumer discretionary has, with its largest component pushing up against new all-time highs,
right?
Second largest component down 60% or whatever the number is, quite a bit. Is it time
to buy discretionary? Look, cyclicals made a new high versus defensives yesterday. Discretionary is part of that, but clearly they're not the driver there. Discretionary and industrials are two very, very unique groups in that they are extremely heterogeneous, right? And so you break those down and you look at the industry groups within discretionary, and you've got home builders that are on a tear, and you've got auto parts that are a disaster, right? And so it's just, and you kind of think about it and say, well, those two are, kind of related in a way.
And then you have Wingstop and Texas Roadhouse, and then you have Denny's, right?
Or Starbucks, right? Or McDonald's. Those are, the big restaurants don't look good, but Chipotle looks great. And, my kids are home from college, and I think we might personally be supporting Chipotle. Like somebody's at the door every half hour. So I'm not trying to waver here. It's negative in our work. It's not like table poundingly negative. It's kind of like in that middle C student type of positioning. But within it, there's several good charts, and there's several leadership names that we're definitely long and we're playing. So I think it's tricky to call discretionary because there's winners and losers within that, right? So
is there a sector that has more bifurcation between winners and losers than consumer discretionary?
Maybe industrials. Industrials are kind of in the same boat, but it's pretty close. It's got to be right there.
Fascinating. Let's talk about the commodity complex. 4 years ago, crude oil literally traded below zero. And that sparked quite an unwind to the upside in energy, in commodities, particularly on a relative basis. The bond market, has gone straight down ever since for treasury bonds. So a lot of things changed 4 years ago. And when I look back at cycles of commodities and energy and natural resources, historically they don't last a few years. They last a decade or more, 2 decades, right? Like these are long cycles. And when I look at the, composition of these indexes, and I see a 3% weighting in energy for the S&P, 2% weighting in the Dow, 0% in the NASDAQ, we're coming off extreme levels and a lack of positioning, but we haven't really moved much. How do you think about that sort of positioning?
Yeah, they got. We think that energy right here is from a cyclical standpoint, it's in a bad spot. It's not where it's not in a spot from the economic cycle where it should do well. From a valuation standpoint, it's actually very, very cheap still. So we don't think that there's a lot of downside. It just kind of.
You're talking oil and gas specifically?
Yeah. Almost across the board, but the best names there are the transports, the marketing names, the refiners. They look, they look pretty good. The Schlumbergers and the service names are under pressure, so we're going to need to see relative performance change there before we get on board those. I think you're in kind of this lull period of a secular bull phase for energy. That's in a cyclical bear phase, right? And so until we see that start to turn, we just sit on our hands and wait for it. We had a big turn. I remember I was at a lunch up in Boston, and we were making a call. It was in the summer. We were outside. We were making a call in, I think it was August, might have been September of 2020, about energy. And part of it was when we went back and looked at the alpha generation for the sector you need a lot of data to do this, but it was over 60, 70 years. We were in a zone that you hadn't created as much negative alpha for that sector historically since, I think it was the mid 1980s, right? It was a long time. And that was the only other time that it had such negative alpha. And that by itself isn't enough for us to buy it. It's enough for us to say, hey, let's think about this, because this is sort of the contrarian zone where nobody is, hanging around, because you'd be fired if you were. And then when the trends change, we just kind of, we jump on them. It's actually what we're doing with China right now. So for us, when we saw that negative alpha in energy and then got the trend change, we were, really all in, and it worked. It worked really, really well. And there's a lot of skepticism around it, a lot of concern about the election and the green energy programs, et cetera. And our point was, look, the market will figure that out. But I never use politics as an excuse to buy or to sell anything, because it is a disaster. I know people get very emotional about it, but it flat out does not work. And
Jeff, the best stocks during the Biden administration have been the coal stocks, and the worst stocks are the pot stocks.
Correct. Yes. I mean, and that's not atypical. That's not just a Biden-esque, performance issue. That is, go back to Trump and look at what happened. So it's very counterintuitive. And that's what I was going to say. If anything, in fact, we have a policy uncertainty index that we use. And so you'd think, when policy uncertainty is high, that must be bad for the market. It is statistically significantly negative, which means it's a contrarian indicator. And so when policy uncertainty is high, you're actually better buying the market than you are selling the market. And so we actually use, to the extent that we use politics, we use it as more of a contrarian indication than not. And so the energy actually fit that bill. So I think, to get back to your question, I think energy is in an uptrend. The charts that are more interesting to me long-term are the material names, right? Gold, huge breakout, silver, massive breakout, aluminum looks good. So it's not just a solar play or a metal play for monetary metals or monetary backing. There's something else going on there. And I actually had a lunch yesterday with a good client of mine from London, and he's like, "What's happening with gold?" And I'm like, "There's a lot of little reasons, but there's no like big driving narrative." I'm like, "I just show you the dots. You can connect them." That's kind of the way I think about the world. So here are the dots. You figure it out. But I'm long. So
Jeff, how do you we recently got that breakout coming out of a 12, 13-year base, whatever it was, in gold futures priced in American dollars. But when you look at gold, and we look at gold price in euro, British pounds, Japanese yen, South African rand. I mean, we go currency by currency. Gold's been making all-time highs pricing all these currencies for quite some time.
Yeah.
More recently, the Swiss franc broke down relative to gold.
Yep.
And now the dollar broke down relative to gold. But that really seemed inevitable and, not really all that surprising considering how well gold was doing pricing all these other currencies. It was just ultimately like in dollars, that was just next in line is really all it was.
That neighborhood. Yeah.
Do you think about it like that?
Yeah, sure. Absolutely. Looking at it's all just a relative trade, right? So gold is just a different currency, if you want to think about it that way. And
do you think about it as a currency or as a commodity?
I think about it as a commodity, but I certainly have a soft spot in my heart to think about it as a currency, right? I mean, I don't get into philosophical battles about it because at the end of the day, it was the original currency, right? So I have no problem with thinking about it that way.
Gold was the original meme coin was gold, right?
Yeah, right. So good luck plugging that one in. But the Bitcoin and Ether and Ethereum and all these these kind of currency alternatives have all held up very, very well, right?
Yeah.
Which says deficits and debt burdens and policymakers probably need to be paying more attention to what they're doing. Just given the if I were in a policymaker position, I would be saying, look, we have the markets don't really love what we're doing here. We have to start thinking about things maybe a little bit more adult-like than how we've been.
I love how Jeff deGraaf is the one who brings up the Bitcoin, so I didn't have to go there. So I love that that you did that. Kudos to you.
Good charts, man.
That's it, man. You're telling me, brother. But I like to look at the whole macro landscape, and I look at $130 trillion bond market and $100 trillion stock market. 16 trillion, 15, whatever it is on gold. These are massive market capitalizations. And I look at all the market cap of all the crypto combined, you're looking at about 2.4 trillion. Bitcoin's like 1.3 of that. Between the top four, Bitcoin, Ethereum, Binance, and Solana, you're looking at just those four, 80% of the total market cap. I mean, it's a rounding error at the end of the day, right?
Yeah.
So how do you think about where that fits in the whole, scheme of things?
I don't. I really don't.
Not at all.
Nope. I don't even pay attention to it. It's just not in my wheelhouse because I don't know how that helps me from a probability standpoint to be more bullish or more bearish. I can't show you that it matters, right? And if I can't show you that it matters, then I try not to let it be part of the input or influence.
Do you think about it as a separate asset class, or are you like us where we think about it as just a different industry group within tech? Like it's not software, it's not semis, it's just another industry group within tech is how we look at it. Would you agree with that, or do you look at it differently?
I look at it a little differently. I do think about it more as a separate asset class because you have to make a conscientious decision to participate, right? It's a different, there's a lot of friction there, right? So you have to go out of your way to participate. So I think about that as an asset class. If I'm on Schwab or Fidelity and I want to buy bonds, I have to kind of go to a different section to buy those bonds versus equities. And so that the more friction there is, between me making a decision and getting that executed, the more I think about that as being kind of a separate entity in and of itself. So, look, I don't look at it as a store of value. I think that's a very difficult proposition. If you give me $100 and come back in 2 weeks and I give you your $100 back, you pretty much know that it was a store of value given, a little bit of inflationary loss of purchasing power, but certainly it's de minimis. It's just way too much volatility to call it a store of value. So I do think it's a speculative instrument, maybe on its way to being, more legitimized, but I think it's very premature to call it a store of value. I think it's a separate asset class that has speculative elements that are tied to philosophical disciplines around debt, monetary devaluation, et cetera. So that's kind of the big picture. But if it's going up, it's going up. And
so when moon, as the kids like to say, we're gonna get these breakouts in any of these anytime soon?
I have no idea. That's beyond my scope, but I certainly, I look at the major players and say, hey, look, there's enough there that we participate. And
are you getting asked a lot of questions from PMs about the space? Or not at all.
Not a ton, but certainly some. I would say it's gone from the illegitimate world to the sort of quasi-legitimate world. Certainly the regulations in the SEC make a difference there, right? So they kind of help anoint that. And so that just by definition gets people more invested and involved because now they've got the cover of regulation, right? So that was, I know people hate the idea of the regulation, and I totally understand it and am sympathetic to that. But if you want real players to come in, you need to have some gates to attract that. Otherwise, the risk is just way too great for them to participate. So,
love it. Last question: best ski resort on Earth?
Come on, Telluride.
That's where I fell in love with skiing in the trees. Was Telluride. So you're not going to get an argument from me. That's the answer, or are you biased?
I'm very biased. I've had a place there for 20 years, but. Where I haven't been,
that was the run. Captain Jack's was the run that finally where I fell in love with the trees.
Yeah, no, that'll get you too. There's there's a run that is not officially named, but they call it Oprah, and they call it Oprah because when she's full of snow and fat, she's great, and when there's no snow and she's thin, she's mean. I'm like, that is just something that a skier would have to come up with, right? So Oprah's great, 2/3 of the time. But I would say the one place, in fact, I was just talking to this with a buddy of mine, is I have not skied Japan, and I've heard fantastic things. Have you been?
No, but Hokkaido in January, like you can't miss. It's like a foot of snow a day or something stupid.
Right. And given the value of the yen, I'm like, this might be time to start doing some booking. So I'll let you know.
But the yen's been falling for a long time, Jeff. It's not like, oh, now it broke.
I know, but it's like at a 40-year low. So come on. I mean,
now's your
pay
chance
attention to these things.
Dude, Hokkaido in January, man.
There we go. There we go.
Ladies and gentlemen, Jeff deGraaf, I really, really appreciate you being here. Big fan.
Thanks for having me. Appreciate it.
Thanks, man. That was great. Jeff deGraaf. That was awesome. Big skier. That's cool. We should do a chart summit in Hokkaido and go skiing.
What Jeff just said about valuation metrics and models is so good. Go back and listen to that 100 times. Valuation models are perfect in a perfect world. I love that. So good.
So that's not our world.
Oh, it's full of imperfections, right? You tweak one little thing, you get the discount rate just slightly wrong. The valuation's 30% different. Where's your target, right? How do you manage risk in that way? Another thing he said that really stood out is we just look to buy oversold conditions in primary uptrends.
Does that sound like a Strazza-ism to you?
I mean, look, we've been doing it all year.
By the way, he defines oversold conditions differently than we do. He's talking about kind of just beat up a little bit within uptrends.
Right. So I wanted to ask if there's a specific momentum indicator or something that he's looking at.
Dude, they create so many different composites. Like you think we create a lot of composites. Where do you think we got that from? First of all,
I know.
Guys like Ned Davis, guys like deGraaf, you know, guys like Roke, guys who've, you know, certainly influenced me and through me, you guys and whatnot, like all these composite indexes we create, you know, they do a lot of similar stuff.
Did you see the big four crypto we dropped in the research chat?
I did not, but the folks over at Yahoo yesterday were very impressed. You know, that we do that sort of stuff. They were like, you know, they were asking me, they're like, JC, you know, who wore it better, Binance or the Shibu? And I'm like, man, like it's not even a question. So I started going into the whole Binance thing, and they thought I was crazy. I was like, listen, if you're gonna go Shiba, you might as well just go full degen, you know, and just go Brad or Pepe or something, you know, like why stop there? Was kind of like my point, and they agreed. They're like, that's true.
You know, while we're on crypto, I know a lot of our audience is interested in this trade right now. Like everybody, even Jeff deGraaf can't help himself but say, "What a beautiful chart." What are these Bitcoin miners telling us?
Can we talk about how Jeff deGraaf is the one who brought up crypto? I mean, granted, I did call gold the original meme token. So he kind of segued that into Bitcoin. So maybe I set him up, but he did bring up Bitcoin before I did.
You know, sometimes, JC, I think to myself, wow, the sentiment's no good. Everybody likes this setup. Everybody's looking at these charts right now, right? Everybody's watching this Bitcoin breakout. But think of the people, the quality of the research professionals or technicians that are coming on here and talking about it. It's not just like people on Twitter. This is Jeff deGraaf coming on here saying he loves it. Brian Lund, Brian Shannon, right? So it's a little different than just the Twitterati loving it, isn't it?
Yeah, I mean, listen, you can make two arguments. You can say, yeah, important people that we respect are opining on the situation, and then you could say it's only $2 trillion. I mean, it's really irrelevant, you know. You can also say that there's a lot of opinions out there and sentiment from, you know, a lack of quality individuals. You know, I think that you are cherry picking some of our friends because these are who you're talking to, but there's a lot of people who, you know, are just hoping line go up, right?
The Bitcoin miners are going ham right now. That's what the kids are saying.
Yeah, you know, great example. Ansem and Tate, like nobody cares about those people at all, right? So when you say it's not a good look, it really has nothing to do with crypto. Those are just like, you know, very sensitive people on social media. So like that doesn't matter. Like,
I don't know what that is. I don't know.
Yeah, I mean, listen, I've been on Twitter for 15 years now. Trust me, I have seen, you know, sensitive little bitches, if you will, for quite some time. I mean, there's really no other way to put it. Like, just listen, there's people that are angry, and you know, they have either mental issues or issues at home, or you know, people have problems, and you don't know what their problems are, and you know, they go out on the internet and take that out on people who are smiling and having a good time and making a lot of money because they don't like to see that sort of thing. That's just human behavior. It's always been that way. It'll unfortunately always be that way. So, you know, on Twitter, we get to play God, which is cool. Yeah. You know, if somebody proves that the world is a better place without them in it, you can just remove them from your world, right? Which is great. You know, sometimes I block people, and I don't really block that many people. It's you have to really be special kind of asshole for me to block you. But you know, you'll be like, oh my God, GC is so sensitive for blocking me. No, it has nothing to do with sensitive. It's that the world, you've proven that the world is better without you in it. That's it. It's that simple. It's a very simple black and white for me. There's no gray area. Is the world better without you in it or not?
Yeah. Twitter's a tough place for sensitive people in general. You know, don't come on that platform being sensitive. You're going to get your feelings hurt.
Yeah. Good.
I mean, it's the internet. Before we bring Sean on, can we please talk about the hot corner for a couple seconds?
Yeah, hit it. Let's go.
All right. This is a good one today.
So hot right now.
All right, Spencer, take it away. What was good about it?
Uncle Warren. At it again.
Is that what stands out today?
I mean, how can it not? You're talking about the Zillow? 100 milli from
Venture-
Jay Hoag?
Venture capitalist, renowned tech investor, really. Jay Hoag. I think it's TPV. I forget the name of his
To
firm.
be confused
know that
with
name.
the young Hove.
I don't know
He's-
why.
Yeah, no, he's a guy. Yeah, you've heard of him. 100 million, dropping it on the Zillow in the base building process. This gets added to our new Screaming Hot list, and we have to keep it on our radar because the trend is in the process of reversing. We could probably jump it ahead of 58. We'll talk about it more in the coming weeks as it continues to climb up the right-hand side of this base. Needs a little bit more time, but this one's looking really good. That's a monster buy by a corporate insider. It's a huge purchase.
How rich is this guy, bro?
Super rich.
And is he like on the board or something? Is that why he's an insider?
Yeah. Yep.
Yeah. Because he's not like a Zillow employee. He's just an investor.
Right. Probably has a
Throw
big
up
stake. It's probably not 10%, but we get lucky when these activist investors join the board because if they don't own 10%, the act of them joining the board makes them a Form 4 filer, regardless of their ownership. So it's lovely when you get some of these activists or these venture guys, these private equity guys on boards, because then we can track them through Form 4s.
Can you throw up slide 2 there just to show kind of like this massive top formation, like just massive,
The nasty.
right? And
Look
how
at the way
I
it broke down, too.
hold
Look
on,
at that.
hold on.
Yeah.
How I was taught, and it's always made a lot of sense to me and certainly helped me, is that, think of the pre-IPO action as the base, and then you get the breakout on the IPO, right? So if you think about it like that for Zillow, going back, almost 10 years, that was the breakout, and it's this massive topping pattern, if you will, theoretically, a massive topping pattern. But what if it's not? And what if my man over here, what's his name? Jay Hoag?
Yeah.
What if my man Jay Hoag is on point here and this is not, right? So like think about it like, fourth dimensionally, if you will, where that pre-IPO base was really setting up and then you get the breakout. So this would look like a massive top if there was more data to the left of the chart. And what if it's not a top?
Yeah.
You're going to get a squeeze and a 5-bagger.
Yeah, dude, I'm with you. You know what else? We have smart friends that work in tech and live on the opposite coast. And when they like names a lot, it like sticks with me. So this is actually a Linson favorite.
Is it?
It's a Howie stock. Yeah. I don't know how he feels about it now, but yeah, he's been big bull on this one for some time. So that always kind of sticks with me.
All right. We're going to talk more about this, not in Zillow per se, but a hot corner in general, how it works and how we actually use these filings to find trade ideas. Because on this show, we talk about what's in the hot corner every single day, but we don't really go too much more beyond that. We're going to go into great detail today at 4:00. The link is in the description. It's at the very top. It's pinned to the top of our chat. There's a QR code on the screen. Thursday, that's today. Today's Thursday, 4:00 Eastern time. Register there. It's a totally free event. And you'll see how we actually use these filings to find ideas that we like. So 4:00, be there.
Yeah, great. And JC just says this could be a 4 or 5 bagger. Sounds tongue in cheek, but it's not. So, we're not out here trying to pat ourselves on the back all day. But when we went back and looked through kind of the track record, just this cycle following giant, Form 4 buys, it's usually Form 4 buyers in at the lows has been just a great strategy for us and helped us get into some of these literally 4, 5, even 10 baggers at the bear market lows back in 2022. And the Form 4s was really what tipped us off and put these stocks on our radar in the first place. So that's
and you guys know me. I don't go around talking about 5 baggers. Like that's just not how I talk. But if this is not a top and we're just at the lower end of this range, if we were to get back to the upper end of this range, which is perfectly reasonable, and this dude who knows way more than us is certainly betting on that, you're looking at a 4 or 5 bagger, and this guy's going to make $500 million on this trade. It's not nothing.
I'm into it.
Okay.
Okay.
Let's bring Sean on. Talk some options.
Bring them on. Bring them out. Bring them out.
Let's do it.
Johnny baby.
JC, the people want to know, when are you going to start your non-denominational church where you get to proselytize and moralize for everybody? Because that's a great riff, buddy. You got to keep that going.
Which one? What riff?
What?
About 5 minutes ago, you were talking about all the people who are, we don't need them in this earth. They're bad for the world. You know,
I didn't say that. I said that I block people on Twitter only if they've proven that the world is a better place without them in it.
Your world.
Yeah, my world's the only one that matters.
JC, when you start that church, I'm first in line. I'll sit in the first pew.
Yeah, but if you're on social media and you're on Twitter, for example, and you're curating your feed, my feed is the only feed that matters. Like, I don't care that Sean follows the third string wide receiver for the Buffalo Bills. Like, I don't give a shit about that guy.
Great follow.
You know what I'm saying? Like Strazza following some obscure golfer or whatever because he likes his shoes or whatever. Like, that's Strazza's problem. I don't need to worry about that guy. You know, like, we each have our own thing. Listen, I got my weird shit too. All right. Like, let's be clear. If you go down my Twitter feed, you're gonna find some random characters are in there. It's like, why is JC following this guy? Well, maybe because he played for the Miami Hurricanes 25 years ago, and I kind of just want to see how he's doing.
Hey, I will give you a shout out. Through you, I learned about that Super 70s sports guy. That guy's great.
Great follow. Great follow. Especially if you're like older. Like, the young kids won't get a lot of it. But like, and I'm kind of like on the younger end of appreciating that guy. If you're like a little bit older or a lot older, you'll love that guy, right?
That guy's great. He's
Guy's
great.
great. Super 70s sports. We got to get him on the podcast.
As good as Twitter is for finance, I mean, it is great for sports.
Hey, speaking of getting cool people on the podcast, I'm not going to drop any names just yet, but I think Strazza and I are going to have an MMA fighter on our podcast. How about that?
Wow. Is he a technical analyst too?
He's a trader.
You know,
Stop.
Yeah.
You know, it's not a done deal yet, but I think in a month or two we might have a MMA fighter who trades on the side. That's going to be interesting, Strazza.
Yeah, I can't wait for that. We were just talking about athletes and being on our podcast. I met an MMA fighter in Miami a few weekends ago. It was like on the Tyson Jake Paul card. Strange encounter.
Well, do you expect any encounter with people who do MMA for a profession to be normal?
Let me just say, he was like the stereotypical MMA fighter. And it was just a blast to talk to him. It was just
I think I'd be a little bit on edge to be hanging out with a guy like that. I think I'd be a little nervous.
Yeah.
Speaking of nervous, selling puts in Tesla.
That makes me nervous.
Not something that makes me feel all warm and fuzzy inside, but boy, is that working, huh?
Sean, why don't you talk about that? How, like, when you're uncomfortable, it sometimes can turn out to be some of the best trades. I know you can riff on this.
Oh, yeah. In fact, I put a hard trade on yesterday. I like to call them the hard trades. The hard trades are the trades that, at first glance, any trader, whether you're a novice or professional, you'll look at it and be like, ooh, I don't know, this one looks too hard. But oftentimes, those are the trades that go on to be the big winners, right? If it's a trade that the whole world's watching, like, let's give a real world example of right now. The whole world is waiting for Bitcoin to break out. Well, guess what? Bitcoin ain't breaking out, but we all think it's going to. Meanwhile, the trades that look really hard, that nobody wants to touch, oftentimes there's great opportunity there. But man, they do make you uncomfortable for sure.
Yeah.
No risk, no reward. I mean, that's it.
Always. How about the fact that yesterday, the three of us come into the meeting and I throw out, was it me who threw out Microsoft? And Sean was like, yeah, I was thinking the same thing. And Strazza's like, yeah, I was thinking the same thing. Oh, it was Strazza who threw out Microsoft. You took the words out of my mouth.
Sean and I were looking at Microsoft 2 days ago.
Yeah. I like Microsoft, but I wonder if the train left the station already. I haven't looked at it today. What's it do? Oh, jeez. Yeah, it's up another $2 today.
Damn it.
Early.
Yeah. I mean, Tech looks so good right now. You guys want to look at some semiconductor charts?
Well, I
Yeah.
just had another question for you guys because we talked about it. Throw up the new slide 2 here, Spencer. So yesterday we had 3 stocks closing above $3 trillion in market capitalization, new all-time highs for Apple, Microsoft, and Nvidia. Between now and the end of the year, which one does the best?
My money's on Microsoft.
Chat, any thoughts? Any thoughts, chat?
I think Microsoft is the most practical pick here because you look at Apple, it's extended near term. You look at Nvidia, it's extended just over a primary trend from primary trend perspective, and then you look at Microsoft, you're getting a freshie right now. So
Yeah, I like
can we talk
Microsoft for that
about
reason.
Apple?
It's kind of a fresh
yeah,
breakout, and I feel like the AI thing has already played itself out in Nvidia, but Microsoft is still way ahead of the game, at least versus Apple on AI. Which, I mean, look, that's if anything's going to drive a big bull market over the next year, it's going to be something AI related, right? Unless something surprises us.
I think too many people agree with you there, Sean. I think there's probably something else happening. But can we talk
All right,
about
let's
how
fade it.
Apple's
Let's sell short.
Apple's back to number 1?
You think Apple back to number 1?
Yeah,
3.3.
dude, it's hilarious because so they fell to number 3 for the first time in ever, right? Like past couple of cycles, right? They've been 1 or 2 with Microsoft. They fall to 3 and they're like, no way, Nvidia, and they launch back to number 1 like 2 days later. It's pretty good. But Brian Shannon always says, like, if you're wondering where they're going, ask yourself, where did they come from? Apple's up 30% off the April lows. Microsoft has been dead sideways, just consolidating and digesting for like 5 months. So
I feel like Microsoft is like the big cap that is just kind of sneaking around. No one's been talking about it all that much. It's just kind of quietly hiding, biding its time, and this might be its time coming up right here.
it's funny because we think of these mega caps as like boring, low vol, but they're not. Like, look at the Apple chart right now. Look at the Broadcom chart right now. These are the largest companies in the world, and they can give you some big sticks and monster breakouts, just like your little high beta, small cap tech stocks can.
Yep. Speaking of low market cap, small market cap, what our little wolf is might be following through. This is the hard trade we put on yesterday. Wolf.
Sean, these things look so good, and Bitcoin is not breaking out. So what's up? I don't know. Either these things have to be on rollover alert, or they're just jumping it, and it's coming. But I think with the action in all of these Bitcoin miners just the past couple of days, like Bitcoin kind of has to break out, or I think they got to give these gains back. I don't know. We'll see. But we love this. Wolf is I would say the best one. Wolf's the strongest one.
Yeah.
I really like this hut too, though. This hut's coming out of a sexy little base. Looks fantastic.
Ooh, we got a sexy base call.
Look up the hut.
I'm looking at it now.
Above all VWAPs. I mean, lots of like here.
Yeah, above 12, I'll get real interested. It's getting there. It's close.
I see what you did there. Yeah. Look, let's do the semiconductor thing real quick. I wanted to talk about some nice semiconductor charts. So,
Ooh.
thinking,
Look at that iron. Sorry, just before we jump there. That IREN. Wow.
So there would have been a harder trade than Wolf. When I look at the chart of IREN, I'm like, holy cow. So I'm thinking on my morning walk this morning, this is really the semiconductor bull market, right? It started with the semis. And if you look at who's leading now, right, who's leading to the upside, again, it's the semis. Like, this is your semiconductor bull market. We always have sector culprits, right, and cycle leaders and cycle laggards. It's all about semiconductors in this bull market. I know somebody in the chat's going to say, what about home builders? They've been great too. A lot of groups have been great. But the semis, over and over and over again, are kicking off the next leg up this cycle.
Well, here's something you don't see very often, Strazza. The semiconductor ETF, SMH, off of the late October lows, we've doubled off the late October lows in an index. That's pretty amazing.
These things are crazy. When you go, I know I've been saying it a lot, but just go down the list. Look at some of these semiconductor companies. We'll do it right now really quick, but they all look so good. What stands out the most to me is Sean, when you look at the market cap SMH, the market cap weighted index, it's been running away, right? It's already new all-time highs on absolute and relative basis. When you look at semiconductors on an equal weight basis, right? This is XSD. So it's not being dragged higher by NVIDIA or Broadcom, completely equal weighted. It's a really nice index. Ripping higher versus the broader market after going sideways for 3 years. There's been no alpha from semiconductors from a broad perspective over the past several years. Just now breaking out versus the broader market. Look at the absolute price chart, breaking out above the prior cycle highs. Like, this is the place to be. Don't overthink it. This is an AI-fueled semiconductor bull market. Own the right stocks.
Can you share that information with AMD? Because AMD is frustratingly not participating.
I know. I'm long. What a dog. Let's look at some ones that are working. Bang. Lam Research. It's the semi-equipment names the past few weeks. That's just so good. So Lam Research is one of the bigger ones in semiconductor equipment. Next. AMAT. Same thing. Close competitor. Next. KLAC. Another semi-equipment name.
There's a lot of these.
Notice all the all-time highs. Next. Do we do monolithic?
One thing I want to add, because I know we got to go. Semiconductors broke out before the indexes did.
Yeah.
NVIDIA broke out before the semiconductors index did, right?
Mhm.
Think about that. We've seen that before. We will see it again, right? The leaders lead early on. NVIDIA broke out before the semiconductors. It's been the monster semi, right? Semis broke out before the rest of the market. Semis have been a leader. Strazza, it's a semis bull market, semis led bull market. They told you that.
You can't have a party without the chips. Yes, MPWR looks great too. Throw up the Dow theory chart real quick just to end this conversation. To bring it full circle.
Can't have a party.
We often say, which one is it? When we're talking about modern Dow theory and traditional or classic Dow theory. I'm just going to come out and say it. It's the one on the right. That's the one you should care about.
Your recency bias is not oozing out of you at all, don't worry.
Brian Shannon made a good point when I put this chart on Twitter. He said it's been that way for like more than a decade now. So how recent?
Honestly, I think it was Brian Shannon who originally brought up semis as being the new transports.
Listen, transport.
JC, I feel like you agree with this though, JC. You've said this yourself.
Yeah.
No, my answer is I don't know, and we do both.
Fine. Okay.
That's my answer. Strazza is now pivoting because
that's a sexy idea. I like it.
Will it end up mattering? I don't know.
I use both.
All I have to say is it's been fun, transports. Bye, Felicia.
Wow. Wow, that's the top.
Bye, Felicia. Wow, that's the first on this show.
Drop the link in there for later today, Spencer. Guys, 4 o'clock today, Strazza and I are going to reveal how we look at these SEC filings. It's not just like, there's hundreds of SEC filings every day. We boil it down to 3 or 5 that actually matter. And then of those, we only get a handful of trades a month, of course, depending on the environment. But how do we do that? Why do we do that? Strazza's our secret weapon. We're going to talk about that later today at 4. Drop the link, Spencer Israel. It's in the show notes.
The link is dropped. It is at the top of the chat. It is at the top of the description on YouTube. That is how you get access to today's stream. We'll see you at 4. Though it's Thursday, so we'll actually see you before that. Sean will see you before that at the jam session. And then that'll be at noon. Chart Request Live. Myself and Mr. Patrick Donawilla back in the saddle. That'll be at 1. And then, of course, our Hot Corner special stream at 4. We'll see you guys there. Go make some money, all right? Peace.
Go Tiger. Go Tiger.
Go Tiger.